Dan Deming of KKM Financial joins us now for the Trader Rundown. An exciting week ahead. Earnings season is here with a lot of companies reporting in with those fourth quarter profits. We have the big banks starting today.
Yes, we do. Citi today, and then we've got other major banks throughout the week and some other big S&P 500 companies. It's going to be an interesting dynamic, Angie, because we got the pre-announcements, we got some warnings, from the likes of Apple, FedEx, and several other companies trying to talk down the expectations going into this earnings cycle. So it's going to be very interesting this week to see how the market deals with these reduced expectations. Are earnings going to come in even worse than what the expectations are, the lowered expectations, or are we going to get a nice surprise here and ultimately have the market react like, okay, maybe this is just a one-off and we can see earnings go up from here?
What do you think about the overall market conditions? Are we seeing any signs of stabilization?
Yeah, for sure. I mean, across the board, you've seen it, in the equity markets and also the commodity space. In oil coming off the lows, 20% off the lows from December. So we're seeing, again, some bounce back in the market, which is significant, and we're also seeing it play out in the volatility space where you're seeing the VIX now going back to some pricing structure in the VIX futures that you would consider that it's going to, again, reducing some of the risk concerns in the market. So I think that, when you see what's going on here, the one thing I'm really focused on though, Angie, is the high yield space. And the debt issue. And we've seen in December, we saw the credit spreads go very wide, and we saw the high yield space come under some significant selling pressure, concerns about the oil prices, and again, these loans that are out there, these levered loans, the debt structure. We see oil maintain a very low level for an extended period of time. They're going to have a difficult time paying those loans back, and we saw it play out in 15. Not so pronounced this time around, but again, a concern for the market.
We definitely heard that from the Fed. The Fed is watching the debt levels.
The Fed is definitely watching, and they've changed their tune. The theme remains the same, but the tone is very different this time around. So it is interesting that they've softened their stance. Patient is their key word right now. And again, now the market is really not pricing in any rate increases for 2019.
Good to know, and wonderful to have you here. Thanks for the Trader Talk.
All right, thanks for having me, Ange.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.